Hello traders and investors. Welcome to the special episode where we are going to discuss about today's hot topic, RBI rate cut. After 5 years since after 2020 India RBI have announced a rate cut. So what are the positives and negatives, how the financial stocks is going to perform, and will this help the Indian stock market sentiment for the investors? We'll be seeing in this video. Let's get into the video. So let's first see the key insights. As we mentioned, this is the first rate cut after 5 years since after 2020 May, where it was reduced 25 basis point to 6.25 percentage. You will be surprised how it will be again 6.25 percentage, because in 2023 February the RBI have increased the rate from 6.25 to 6.50, which is standing till as on date. With this, on 7th of February, today, RBI Governor Mr. Sanjay Malhotra have announced that the repo rate will be reduced by 25 basis point from 6.50 to 6.25 percentage. So we are seeing the strong GDP growth seen with the recent budget. It stands at 6.7 percentage for the financial year 25 to 2026, and also inflation rate stands at 4.2 percentage. So the governor also mentioning there could be a chance of the another rate cut, which will be on the April month meeting, but is saying it's not sure till the economic situation how it will be on the month of April, then it will be decided. So how the experts are looking into it on this rate cut? So most of them experts are saying there could be only one reduction in April for 25 basis point, and some other experts like Nomura forecasting there could be 3 to 4 rate cuts in this cycle. Let's have to wait and see how the global market is performing, because already the US have reduced already to 25 basis point, and also UK have also reduced. So this is our first rate cut in 2025 after our budget. So we have to see how our economic conditions is going to perform. So with all this, in this video we are going to see how the financial stocks is going to perform, which stocks is considerable, why, and the data is indicating how the investors can make it. So let's see in the upcoming slides. So what are the benefits and cons for the financial sector? First we'll see with the banking stocks. So traditionally the lower rate cut will be a positive for the retailers. So because most of the banking loans are being taken by the retailers, so which traditionally improve the loan rate for the banks. With all these things, so how the bank is going to help with this? Because banking lending rates are connected with repo rates. That's how, so automatically the banking will be reducing their rate cuts. So what cons we are having here? Mostly the private banks, which we have to say, the credit to deposit ratio will be almost around 80%. But in order to attract the investors for the deposits, most of the private bank are giving almost like a 90% credit to deposit benefit, which will be impacting on their revenue by the rate cutting. So banks have to fund their growth, as we mentioned, because of their costly deposits, as deposits rates are fixed. So they have to go for the huge amount for deposits to attract the retailers to get their fund flow. So margins will improve as HDFC Bank replaces market borrowing because of the recent due to the merger, which relatively making low cost deposits. And comparing to the other stocks like Kotak Mahindra Bank, which we already have a detailed analysis, which is a long-term underperformer for the last 5 years, it given almost 0% return. With this rate cut may be given attractive for this stock. Also, there are mid-size bank stocks like a Federal Bank and Karur Vysya banks also will be focused on this rate cut. So banks are always improving their, increasing their branches, and they need a fund for it and their manpower to increase for it, which is very sticky on their revenue with increasing and reducing the rate cut and increasing their establishment of the different centers will be a challenging for them, which may keeps the stocks in a sticky. More than the banking sector, we can see the NBFCs will be having a more benefit than the banking sectors, because there is a mostly like a digital approval process of loans are been happening, so where they will be in more focus comparing to the banking sector, and NBFC's loan approvals are seems to be easy. So in this scenario, so Bajaj Finance and Shriram Finance seems to be a very attractive, and from the housing finance sectors, Home First, Aadhar, Repco are seems to be attractive. So with all the rate cut and the recent budget with the income tax slabs benefiting for the middle class peoples like 12 lakhs earning people, so it should be taken into consideration after all the analysis before going for the financial stock investment. So but how we will be benefiting on these stocks, we will be seeing the NBFC stocks valuation, how the peers are connected. If you see the NBFC stocks, Bajaj Finance, it's having a loan growth of 34%. Shriram Finance is having a 16% loan growth. Cholamandalam Investment having a 37% of loan growth. Mahindra and Mahindra Financial having 24%. Sundaram Finance having 27% of loan growth. So their earnings are predicted for financial year 2024 to 2026. For Bajaj Finance, they are expecting of 19% CAGR. And for Shriram Finance, 19%, Cholamandalam with 29%, Mahindra and Mahindra Financial with 21%, Sundaram Finance with 15%. So this is for NBFC stocks. Then we will be seeing the HFC stocks. HFC is none other than Housing Finance Company stocks. So where the LIC Housing, Bajaj Finance, PNB Housing, Canfin Homes is on the top for the mid-size priority, where they are LIC Housing is having a CAGR very less, 5%. But if you see the private Bajaj Financing, it's 30% CAGR is expected, and Punjab National Bank Housing Finance with 20% CAGR, Canfin Homes with 14%. If you come to the small caps, Aadhar Housing, Awas, Repco Home First, Aptus Value, India Shelter is in the affordable, where most of them will be looking for the housing loans, mostly due to the rate cut, and expecting of more than four cycles of rate cut. If it happen, then these stocks is going to be a outperformer than comparing with the bankings or banking stocks. So with all this, if you see the loan growth of the small caps, the other housing is having a 22%, and Awas is having 22%, Repco is having 9%, Home First having 35%, Aptus Value is having 29%, India Shelter is having 40% of loan growth. So comparing to the mid-size banking and to the housing finance stocks, the small caps are outperforming on this housing finance sector. So with all these things, you have to do your own analysis in prior to investing on any stocks, and that's how it will be benefiting you. A smaller investment and gradual investment, whenever the market is getting to the support level, it will be benefiting you for the long-term returns. I hope this video is beneficial for you. If you like this video, please support like button and subscribe the channel. Thank you. Stay safe, invested.